Let's start off first with the tentative agreement with the Auto Workers Union and Ford here. I know we had some sense that there had been a material impact from this roughly month-long strike here. Now that that has been resolved, is there any sort of clawback of, I guess, what investors had priced in terms of the negative downside?
Yeah, after 41 days of a strike, almost 17,000 Ford UAW employees out of plants. It's great, it'll be great for Ford to have these folks back working and have these plants back up and running in the next few weeks to months. In terms of the impact, right, for the third quarter, only 2 weeks and one plant at the time, looking at probably about 100 million EBIT impact headwind to the third quarter. And, rounding up all of the plants that have been down, and for the fourth quarter, we're still probably looking at about $1 billion EBIT hit to the fourth quarter for Ford with the strike now hopefully behind them.
It'll be interesting to see kind of the commentary later today out of the company, particularly when it comes to its future. And we know that that future, at least for a while, seemed to be centered around electric vehicles. But I feel like over the last few weeks, they've kind of sort of tempered some of those expectations. And what's the balance that you're looking for between the legacy internal combustion vehicle sales and what they've been trying to do with the expansion of EVs?
Yeah, it is one of the critical debates right now. And we saw this from GM earlier this week, right? Walking back the EV, the intended EV ramp, right, so to speak, and really underscoring the flexibility in their production, right, flexing EV production relative to demand. And Ford actually started talking about that last quarter, right, really starting to emphasize and remind folks of their hybrid, right, their hybrid offerings. And I do think that Ford, there's a real opportunity. They're losing $4.5 billion in their Model E. That's their EV segment, Model E segment. $4.5 billion is what they're losing this year. In my forecast out to 2025, I still have them losing a little bit more than $2 billion by 2025. But again, relative to this baseline, there's a real opportunity to improve that loss rate by $2 to $2.5 billion. It'll really come down to flexing the fixed cost structure of your EV production, flexing that cost structure to really match your intended volume ramp. That'll be the key.
And James, just quickly here, what is priced into Ford shares right now? Because I look at the reaction today and I see Ford shares down 0.7%. I look since the start of July, down, of course, about 24%. What's actually priced in here?
Yeah, I would say a lot of bad news today and in the future, right? I mean, there's a lot of skepticism for the incumbent OEM space, in particular, GM and Ford. It's really going to, once we get past the UAW major topic, the next debate will be one that was, front and center before the strike, which was pricing. Right? To what extent will car pricing have to come down? I think we all know that there's only one direction for pricing to go, and it is down. But there's a massive debate as to the extent of that. And so it's really going to come down to, do we have a soft landing over the coming years on pricing degradation? And I think that and the EV, the transition to EV, how that progresses. Those are the two major factors that negatively are priced into the stock right now, I would say.